Good morning, trading world. Today is May 4th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Today is all about the Fed and their guidance. It is expected that we get a 50-point basis rate hike. However, it is possible to see a 75-point basis point raise or a 25-point basis raise. Now, the 75 basis point raise could open us up to more bearish sell side activity, while the 25-point basis point raise could open us up to a bullish bounce immediately. Now let's look at some of the leading signals. Apple is at a binary point like most of the other main staples of the market right now. It's at a midpoint, which means there is no directional bias speaking quantitatively. However, there is a slight bearish bias technically speaking. It's at a resistance level of 160 to 161. And what we can do, let me bring it in here just a little bit. As you can see, we've been on this line for a while. We've been trading in this really tight range, which means we're really about ready to break out. Now, this is how things are going to look. If we get a 25-point basis rate hike, it could take us up and break us out of the current range. If we get the 75-point basis rate hike, it could take us back into the bearish sell side activity. Needless to say, the 50-point basis rate hike kind of keeps us kind of range bound in this area. So that's what we're looking at with Apple. Now here we have a chart of Microsoft, and if you notice, Microsoft is doing the same thing. It's trading in a very tight range, ready to kind of explode and break out. Microsoft is also at a crucial resistance point. That 285 to 287 area is its resistance point. Then we have Amazon. Amazon has already gone through a lot of sell side activity, but we're back at a point where we're building a wall, and we're at that point where we could resume sell side activity or break out to the upside. And that resistance level for Amazon is 25.24 up to 25.34. So 25.24 to 34. So up here, we break out above that area, we could kind of break out into a bounce for a bit. So all of the aforementioned stocks seem to have built the wall of resistance, and today is make or break day. As always, before most Fed meetings, we could and should get this algorithmic orderly float up or down. So once the once the opening bell rings, we could see this orderly flow either up or down. All right, let's get to the key levels of the day. Starting on the resistance side, we have our jack resistance at 418 to 419. Then our queen resistance level at 420 to 423. And then king resistance at 424 to 427 area. On the support side, we have our jack support at 417 to 416 area. Our queen support at 415 to 412 area. And king support area 411 to 405. The main thesis today is bearish, closing below 416.38 with a projected low target of around 414 to 405. The alternate thesis is bullish, closing above 416.38 with a projected high target of 420 to 427. Keep in mind this is a Fed day with high vol, so we could see both the main and alternate thesis play out today. And it will feel like we get two different day structures all in one day. The current channel we are in is 416 to 425, with the minor channel being 414 to 425. Normally I would draw out the different day structures, but since this is a Fed day and I'm expecting so much more or a combination of structures, and I'm a little lacking when it comes to equipment here where I am, I am going to just give two scenarios of how things could kind of play out. The first thing that we could see, like I said, usually before the Fed announcement, we usually get this algorithmic float, and that float could be up or down. So we could continue to kind of get this float up, because right now the hourly is the chart that's in control. But even on the hourly, we're close to that, making it back to that midpoint, that happy medium where everything is okay. And that is somewhere around that 416, 415 area. So we could continue to get something like this into the open, and then get a possible bounce back up, and then the Fed meeting at 2 p.m. where things would get crazy. (2 p.m., 2:30). This is where things could get really crazy, and we could get this move here, and bam. And this is where everything really matters. So that's one move that we could see play out. We could also see another move pretty much like this, which would be, could be the opposite. We could go up first, come down, find our way into the Fed meeting, and bam. Those are the different scenarios that I'll be preparing for. But in an earlier outlook, I did point out where there is a bounce beginning to build. And I said I wouldn't be clear about it until the 5th or 6th. So I'm seeing today could be another push down to kind of revisit the lows, and then the rest of the month of May we get kind of going into that bounce, pushing up and range bound. So those are the things that I'm looking and thinking about right now, because there is a bounce building under all of this. And when I say bounce, majority of it is going to be short covering, because there are a lot of short positions being held in the market right now, and the covering of that can spark what could turn into a real bounce, because we're approaching that. For anyone who listens to me on a regular basis, I often use the analogy of the market being a runner in a marathon. And when you run a marathon, you have these planned water break points. And when it comes to the market, that water break point is a consolidation area. And we're approaching that on one of the larger time frames. So being that it's a larger time frame, eventually further on into the month, we could get a consolidation on that larger time frame, which could look to take us back up near the 430 area, 427, somewhere deep into the 430s. So be aware of that. But I do see us kind of revisiting the lows today or tomorrow, and then at some point that bounce can start once we kind of revisit the lows. So I hope this helps. As always, please know and understand your risk. Again, wishing you a positive trading day. Have a great one.